Awesome. So yeah, just like that, we're live. Not much different than the pre-show. I'm really excited. Chris McCann here is the venture investor, venture partner at Race Capital. Maybe Chris, we're talking pre-show about Startup Digest. Maybe if you want to give your view of where the kind of startup ecosystem as it relates to say funding early stage startups, if you want to maybe paint a picture there as to, weave in your background and give your general state of where you think things are today. I'd love to hear that.
Yeah, I guess if you're asking me comparatively, the short TLDR version is it's nuts today. I graduated college and I moved to the Bay Area to Palo Alto in 2009. This was right after the whole sort of real estate collapse, financial collapse. So I remember I got an apartment on University Avenue. This was like the most expensive, hardest block. Like you literally can't find anything. I got one on there, 3-bedroom apartment for 3 of us for like $2,400 a month. Like ridiculously reasonable. You can't find anything like that anymore. At the time, like the downtown Palo Alto, a lot of it was vacancy. And I remember there was like a little news article from like the downtown Palo Alto thing saying, "Is this the end of downtown Palo Alto? Is it like over?" Yeah, back at that time, I guess it was, rougher from 2 perspectives. So yeah, one, financial world was not doing well. 2, which I think it's sometimes hard to remember, startups weren't really like a thing yet. They were obviously a thing, like people were doing them and really into them, and there's a kind of whole cottage industry of all this stuff, but it wasn't like a very popular thing to do. Facebook really wasn't at scale yet. Like nobody had ambitions of being startup founders. Like people wanted to be investment makers or consultants. Like nobody wanted to be a tech founder. And so,
yeah, I guess like early stage, like it would be Oracle, Sun System, maybe Google, but even that's kind of early. So people didn't have that example of what real success can look like.
Yeah, even like Google was there and it existed, but like it was not like a super cool thing. People didn't. I don't know. It just wasn't regarded as such. And so yeah, the culture of funding was very different. A lot of the power resided within the venture funds themselves. There wasn't like a ton of companies being started every day, every week, whatever, like we see today. Venture financings were more few and far between. TechCrunch used to write about all of them. TechCrunch was still new themselves. A lot of people had questions of how they can get into the industry, which is why I started Startup Digest. It was one of the early tech newsletters in the space. We ended up covering 550 cities, 1 million subscribers before we sold it to Techstars. But even then, like tech newsletters were not a thing. It was not an industry. We were one of the earliest users. We actually might have been the biggest user for MailChimp when they first started. A lot of their stuff didn't work half the time. We were stress testing a lot of it. But yeah, the stuff was not really popular. To me, I think the biggest turning point was really, I think a lot of people like to talk about kind of all the funding events and technical things, but on the cultural side, I think the biggest turning point was the Facebook movie. After the Facebook movie, people aspired to actually be a founder themselves. People outside of graduation, when they came out of school, they're like, yeah, I wanted to do this tech startup thing. It was a very different paradigm post that.
Yeah. Yeah, because you really didn't know what it was like. You only have your own life to compare to and people you see. And if you don't see, to your point, you can visualize sitting in a room and there's like Red Bulls and there's, it's late at night. And all these things kind of collectively play into the role, which then Silicon Valley makes it's not Silicon Valley. What's the show I'm thinking of? On HBO.
Silicon Valley.
Is Silicon Valley? Yeah, they make a kind of a joke of it later.
Yeah. I guess without dwelling too much on the past, if you look today, it's totally different. Everybody wants to do a tech company. Everybody, even if they have a job, they have a side hustle doing a tech company. Everybody wants to be a crypto entrepreneur. Everybody's doing NFT stuff. Everybody and anybody wants to do this stuff. I remember I went to my, I just spoke in my alma mater, Cal Poly San Luis Obispo. And a couple of the students came up to me and like, oh yeah, we're doing like NFT side projects. I'm like, how do you guys even know like what any of this stuff
Yeah,
is? Like this is great.
awesome.
This is crazy to me. It's definitely, it's popular. It's cool. It's the cool thing to do. You've seen this weird meshing world of like Hollywood and LA and tech and, you know, all this sort of stuff. And then the outcomes for a lot of these companies have gotten bigger. So Facebook, Google, Amazon are not like small, little, tiny companies in the public markets. These are the biggest companies in the world now. So everybody has ambitions to build one of these things. And so thus, and outcomes have gotten bigger, funding rounds have gotten bigger, the amount of companies have gotten bigger, the amount of spaces these covers is bigger. It's totally a complete 180 from how it was before. So I guess to elaborate on my TLDR, like this is in some sense why it's nuts, just because the overall opportunity is bigger and the number of people doing it. And so you're getting a much bigger splattering kind of across the board.
So if you're, say you're on the venture side, or you want to be investing in companies, either individually or through a fund, do you view it as the competition to invest in great companies is so high that there is a valuation marker that's pegged to these companies that isn't going to justify the investment? Like it's hard to participate in the game when there's I don't like the word bubble, but it kind of is a abbreviated way of summarizing this. It's like there's a great opportunity collectively, but everyone's so excited we're overpricing everything. And then it's like, where do you?
Yeah, to some sense, yes. This is why you've seen funds and people and angels and everything go earlier and earlier, because that once it's proven and once people can see something that it's working, things are getting bid up like insane amounts. Think like your Series A, B, C, D. Like these things are nuts. And so now people and funds are moving down the spectrum. Seed rounds, pre-seed rounds, before pre-seed rounds, investing in you before you even have anything. Because the more unclear it is, the more risk, the more potential upside, and the more, I guess, like future potential opportunity there is. I guess with the reverse caveat of the more noise there is. Because, you know, when you're looking at companies pre-product market fit, you fundamentally do not know what's going to work. And so you have to use a whole bunch of other tools to try to figure out what that is. And then probably more importantly is you can't just kind of be passive on that in some senses. You have to actively work and encourage and do stuff to try to help companies cross over that chasm. So the biggest difference between seed and sort of post-seed or, you know, post-A or whatever you want to call it is post-A, you have something that's working, so you're just adding fuel to the fire. In the seed round, you don't know if it's working, and so you need to have as many rapid iteration attempts or many things thrown at it to see if this thing will work even in the first place.
How do crypto projects or companies differ from typical early stage startups in terms of the things that would be helpful? Like I'm thinking traditionally, you know, introductions from investors to other investors or partners or potential customers, recruiting. There's certainly a lot of overlap because they're both building software. Are there things that are distinguishably, I don't know if that's a word, but different between the two noticeably?
There's a lot of things that are the same, and I guess some key things that are different. I guess talking about the things that are the same, access to other capital, you know, friends, funding rounds, talent is a huge one. Not just talented people, but people who actually want to spend their full time in crypto. Since it's a more esoteric ecosystem still, like having good people from the traditional world that want to onboard into this, not just from like a passive side, but like actually spending their full time on this. Like this is a really, really hard thing to do. I remember one of my early seed investments I did was in a Solana, the layer one network that's out there, and I helped hire them their first head of design. It was an incredibly difficult role for them to get because historically a lot of designers have been more conservative, and there haven't been as many good designers within the crypto space. So luckily, Josh, who they hired, he's a really well-known kick-ass designer from the traditional world, and he actually wanted to join and took the big leap of faith. That's very hard to do. I guess some things that are different. I guess in the normal space, introductions to customers is a very easy thing. We have Fortune 500 customers. We do all these customer demo days. We want to put you in touch with all the people who are going to use it. In the crypto world, this doesn't really apply. There's not customers in the traditional sense. There are things that are different and unique. So I guess you have your initial users of the protocol itself. You have your initial liquidity providers, so the people are going to put capital into the network itself. These sorts of participants have a much higher sort of weight, if you will, into the system. But like these are not your classical customers that any venture fund is used to, which I think there's a reason why there's only a few of these crypto native VC funds who have either been able to cross the chasm or have been able to start specifically for this space. Because again, a lot of the participants and users and partners and other downstream investors, they're just different. It's not necessarily so completely unique, but it's a different ecosystem with its own different kind of considerations attached to it.
Yeah. On the managing a fund that invests in crypto companies, is there a different approach to the LP side, raising money to then spend it on these projects? Or do you think you could even, I'm curious about that, and then who else you see doing it slightly differently?
I guess let me answer your question in two parts. For us, not as much. So Raise Capital, venture fund based in the Valley, we do all early stage, and we invest all across various different infrastructure layers. So data infrastructure, transaction systems, ML infrastructure, open source, financial infrastructure, DeFi infrastructure. I spend a lot of my time mostly in the DeFi and kind of fintech and financial infrastructure world, but we do a lot of other general investments too. I kind of treat the whole Web3 and DeFi as like one of the most interesting new emerging tech categories. But at least personally from a fund side, we don't treat this as different. We just treat this as part of one and the same thesis. So for our own LPs and investment strategy, we invest across both of these things. We invest in a ton of traditional companies and a ton of crypto companies. We're probably one of the more unique in that area because by and large, most of the funds that deploy capital in the space are usually set up and designed specifically to be crypto funds, that they themselves only invest 100% in crypto companies, with I guess two kind of flavors to them. There's crypto VC funds, which kind of look like general VC funds, take longer term bets on new early projects. And there's crypto hedge funds that do a lot more trading, arbitrage, like a lot more shorter term thing to kind of get their return bucket. I guess for them, it's a little bit different since their entire thesis and worldview and everything is all about the specific crypto space. And so they're kind of pitching and promising like to their own investors and LPs, like it's a much more crypto sort of centric worldview, versus for us, like we just treat this as like just another market segment, a very exciting market segment with a lot of differences to it, but we just treat it as part of our kind of overall thesis itself.
Yeah, interesting. That's a really good description. The hedge fund. I interviewed a friend of mine who you may know, Ethan Kravitz, who runs a crypto hedge fund, and he described it in detail what he does day to day, and it certainly sounds more akin to trading, coming up with arbitrage strategies, much more liquid. When you're probably when you're making an investment, you're thinking, years, maybe even decades for an investment, whereas he might be thinking minutes, hours, days. So it's much different. I guess it's somewhat dependent on the personality type of, maybe who's investing in the fund or the manager.
Yeah, that's why I like to say, like, I guess like we're the, and I say it with all niceness to it, is like we're like the most boring crypto investor in the space. I guess like one of our portfolio companies, Saber, it's like one of the biggest DeFi apps within the Solana ecosystem. When we participate, like our intention is just to hold it. Like we don't do anything with it. We don't trade it. We don't do it for liquidity providing. We're not doing yield farming. We're not doing any of this cool stuff. I get to try some of this stuff from a personal perspective, but from a fund side, we just tend to buy it, hold it, very long-term bias attached to it. For that reason, I guess it gives us the flexibility of like we don't really have to worry about day-to-day price as much. I don't really have to pay attention to like the news and cycles and stuff as carefully. Because again, because all this stuff is liquid, there's a lot of the stuff goes towards it. And a lot of people are trying to follow the narrative and pick the next thing and sort of trade in and out and all this sort of stuff. But from our side, we're just trying to pick great teams, great companies. Again, the more traditional VC mindedness and pick things that are going to matter from an infrastructure layer perspective and back them and hold them for as long term as we humanly can.
Interesting. Do you try to, I guess, what do you view as your differentiator is kind of a buzzword, but the ability to determine these teams? There's so much noise, as you said early on, when you're picking early stage crypto companies, and there's just millions of people in this space, or maybe even thousands, probably tens of thousands realistically across the world. I imagine it's video conferences. You're not physically going to these places like you typically would in the Valley. Are there things that you've noticed that tend to correlate? Certainly having a PhD in cryptography, but other than the say obvious academic credentials and experiences, are there other things that you've kind of realized tend to correlate with success?
Yeah, I guess let me answer that question in two parts, and I guess this is more around the where do we find them and how do we filter? How do we filter? How do we pick? For us, or I guess let me back up. For the crypto ecosystem, maybe one different thing compared to traditional world too is a lot more of this stuff is out in the public and built in the public and out in the open source domain than in your traditional space. Like for example, when you look at a lot of financial infrastructure in fintech world versus financial infrastructure in DeFi world, financial infrastructure in fintech world, a lot of this stuff tends to be pretty closed source, built on core banking systems, very opaque, kind of how it works in the back end. But then it's packaged really nicely for a developer to use on the front end. Versus in the crypto space, all the underlying stuff tends to be all purely open, built on top of completely open ledgers that anybody can see at any point in time, all of the details and inner workings in it. It's not packaged as well as an API for end people to use. It's still pretty rough to use a lot of the stuff. Documentation's not great. You kind of have to be in it to kind of know what you're doing. But you can see a lot more transparently everything downstream. And that also applies to the founders themselves. Like if a founder is building, like I guess for example for Saber, like they had already built a first version of this, which is open source. The Solana team itself already took a look at it and vetted that it was actually good. They were part of the initial group that initially created the word DeFi, Dylan and Ian Magliano. So they'd like been longtime participants in there. We reference them from a bunch of people who knew them from a lot of their work, who said highly great things about them. And so it's very, not easy, but it's more open and more transparent to get a lot of intel from a bunch of different places. Yeah. And people have seen your prior work. And this doesn't only apply for the technical side, this also applies for the community side. Because usually most of these communities are open. Anybody can join the Discord group. If you really want to see how the project's going, like literally just join and ask questions and see how people sort of operate with you. Again, this is very different than your kind of Web 2 counterparts, where a lot more of the company side is much more opaque and you kind of don't really know what's going on downstream. I mean, crypto, you can see all this.
Yeah, and you could see it because there's no incentive to hide it, right? Because you're building something that's publicly accessible, public domain right off the bat. So unlike a company where there's a value, which I even kind of debate this, but there is value in keeping secrets and not sharing what you're doing with your competitors and creating value internally and then releasing it all at once to the market. And so there's interesting companies like Buffer and some others that are completely transparent with salaries and what their roadmap is. And it seems to be moving in that general direction, although it seems to be correlated to the size of the company. As they get bigger, I'm sure there's more HR and just hassle to go through and make everything transparent. The consequences are bigger as well. So I think that's somewhat a factor to the size. There's really there's no downside of a 2-person startup just telling everyone what they're doing because no one really cares, generally speaking.
Yeah, and of course these are general statements. There's definitely, I
Yeah.
guess, companies in the Web 2 space that are more open and completely closed, and then there's, companies in the Web 3 space that are probably a little bit more centralized and closed than other counterparts. But yeah, by nature, as a general comment, company in the crypto space tend to be more open and transparent about all this stuff, which again, it helps a lot from a investor kind of diligence perspective. If you do the work and you kind of know the background of a lot of these folks and kind of where it came from and a lot of the lineage of this, then it is somewhat easier to make decisions. However, with the caveat of like there is a lot more noise, and then there is a lot more grayer areas on a lot of this stuff too, because a lot of crypto projects have a token component, and the token is sometimes launched live very quickly. There's a lot of teams who are doing this not necessarily because they want to build something long term, but like they're trying to capture just like a short term bump or movement or anything. So again, from a longer term venture capital perspective, that's usually the harder one of trying to tease out people's motivations and really understand why they're building what they're building, like what their longer term intention is, how long they're going to stick with this. Because again, we hopefully want to back like the people who are going to be here for many decades to come, not just in this like short 1 to 2 year window.
So are you going in Discord and you're going on individual projects and looking at the threads and diving in? Do you feel overwhelmed by the number of projects going on? I mean, you can only be in one Discord channel at a time.
I guess let me answer your question again, maybe in two parts. Like one from a personal perspective, yes, I like to go, and I'm not like a super heavy participant in like thousands and thousands of groups because it can get super overwhelming really quickly. But yeah, for the ones that we're serious about, like we try to have like a voice and impression, say things, back people up. Like even for Saber itself in their Discord community, a lot of their early users had like questions and stuff, and I don't know, when the team was sleeping or something, I would jump in and like answer some questions. I'm not necessarily part of the team or whatever, but like I've seen this before, I've seen the answer for it, and so I can kind of just relay back to it. Like I just treat myself as another community member, so to speak. And eventually these things can kind of take a life on their own. The second part to your question is some people also come to me with this question of there's so much stuff going on. How do you keep up with it? How do you keep up with all these groups? So what do you do? My general answer to this is, a while back, the crypto ecosystem used to be a very simple thing. Like when I was working at Greylock Partners back in like the 2013-14 timeframe, we made a handful of investments in the crypto space, which is really the Bitcoin space because that's all there was. There really wasn't anything else. Like Greylock invested in Zappo, Blockstream, Coinbase, all within that time frame. There was not hundreds of thousands of companies doing this. It was very small ecosystem. Now this has gotten very big. So sometimes I kind of laugh too. Crypto's not like a singular thing anymore. It's actually like an agglomeration of like a bunch of different industries. There's people doing stuff in creator economy, in gaming, in DeFi, and finance, and centralized fintech, and decentralized social network, decentralized identities, DAOs, and go on and on and on and on. I mean, there's and not all these pockets talk to each other. Like I remember I have an old colleague of mine at Greylock that looks at a lot more things on like the consumer and gaming layer. And he was telling me about like these 4 or 5 or 6, different games. I was like, I've never heard about any of these things. Now I was telling him about like 3 or 4 of these DeFi things. He was like, I've never heard about any of these things.
And they each probably have millions of people who use them.
Yeah, so even people full time in the space, you just cannot keep up to date with everything. So instead of trying to do that, pick whatever resonates with you. I don't care what it is. Gaming, DeFi, whatever, NFTs, don't care. Pick whatever it is. Don't try to find all the projects. Find the ones that resonate with you. If it's NFT, whether it's generative art or PFP or gaming items, don't care. Like whatever you think, and then go deep in whatever community or subspace or project it is. Again, you could always switch over. You're not picking it for life. You're not joining them. It's not a full-time job. So the cool thing is it's super self-sovereign. So you can pick something up because you're interested in it and go super deep in it. And if you get bored or something, pick something else. But don't try to boil the ocean. Like try to go much deeper on the things like you really care about.
Yeah, that's a good piece of advice. Probably true for just about everything in life too. The temptation just to be kind of average at everything and not spend enough time to get really good at anything.
Yeah.
That's interesting. Do you feel like the segmentation is now kind of DeFi, NFT, call it almost a miscellaneous category, which would be, everything in traditional startups that's being remixed, and then mainstream currency, just a replacement to the banking system? Is that, or am I missing a major category here? It seems to me like how it's split up.
Maybe I might rephrase it a little bit. I would say currency, if you will, which is really Bitcoin and Bitcoin ecosystem. I'd say layer one computation infrastructure. Think like Solana or Ethereum itself, or Avalanche, or many of the other counterparts. And then you have all the applications built on top, which I probably put in a few buckets. One, financial related applications, which is really primarily all the DeFi related stuff. And then two, all of the more consumer oriented things. So this is where I'd put gaming, creator tools, social networks like BitCloud and all that. And then maybe the miscellaneous bucket of all the things that either support all these things or the tooling around them. So think like your wallets, your Oracle systems, your DAO tooling, all the stuff that kind of goes into running all of these things. That's probably how I'd slice it, at least from a more technical architecture layer. I'll send you as a follow-up. I wrote like a super long blog post about all this stuff, and I have this one little more technical diagram about how the space looks like. I'll send it to you.
Oh, great. Yeah, we'll include it in the show notes. Yeah, I'm sure that's more visually compelling than when you try to describe it. I sometimes think that, we have this acclimation to the way the world is. Things just become normalized at a certain point, and you swim in the crypto universe all day, and just kind of, this is it. I'm having my morning coffee and investing in crypto companies. This is only 5 years old, 6 years old, maybe 10, you could argue. Do you see is there starting to be a clear or more clear way that the world is structured, or is generally, the concept of decentralization, it's huge, and just how information and privacy and intelligence and energy in the form of currency is held and transferred between people. It obviously shakes up the world in a huge way, but does it converge at something in the future where it either affects the way we govern, human beings govern each other, or the way that we interact with each other? And, do you see this moving to completely digital land where the average person in the street is just, all their attention is concerned about the digital land? And it's like a Black Mirror episode where, the guy in person, he's like, this world that we're in right now, this is only content for the digital world. So it's just like a stage play, basically. And it's hard to not imagine that future.
Again, maybe let me answer your question in two parts. One,
Sure.
with the most clear, at least to me, sort of version of this in the future. And then two, the more speculative, funner things where it's a little bit less clear in how things will shake out.
Yeah, I may make no sense right there. You could certainly push back on
I think to me, the clearest innovation of all this is all this stuff is innovating on the financial infrastructure layer, which again, why it ties so closely into raise capital, the stuff that we do. To me, FinTech 1.0 or FinTech in the Web 2.0 or whatever you want to call it space was really innovation on the UX layer. It was making things look really nice to fit on a cell phone, to make you interact with stuff. It wasn't touching any of like the lower level stuff, but it was making things prettier, easier to use, easier to access, opening up access for historically marginalized communities or groups of people. All super important stuff, but all mostly on the top end, on the front end layer. Crypto or DeFi as a whole is mostly an innovation on the lower layers. It's mostly an innovation on where the actual ledger sits. In this case, it's actually the public blockchains itself, where the transactions take place, also the blockchains themselves. All the financial infrastructure of how these applications are constructed, how the structured products are actually made and handled. the crypto space is pretty bad at all the UX front end stuff, which is why it's a little hard to use. It's a little confusing for people because again, most of the innovation has been done lower layers, not so much in the upper layers. I think it'll eventually come, but like we haven't quite hit that yet. And so when you project this out in the future, all of the financial transactions that we do, banking systems that we run, how we invest in things, how we hold capital, how we invest in capital, all could be disrupted by all these new rails that are being made for a global audience to run 24/7, to be able to run more trustlessly, either with trusted counterparties or on your own, that we could all hook into, that has some hooking in relation to the traditional fintech and banking world. If you want a more defined way to think about it, you can look at all the things that FTX, which is a portfolio company of ours, is doing, or something like a Coinbase. And like this is the interesting sort of melding or mixing of the two into a singular interface. Or to some extent, you could also think about like Robinhood and a lot of the crypto stuff that they do. To me, the financial stuff is the most clear and obvious. Still super early, still a long way to go, still a lot of stuff to do. But like this is the bread and butter of how value is sort of transacted and kind of why it matters. The second part, the more speculative, is the more fun stuff, I guess, is, okay, if we start to use these, Bitcoin blockchain rails to transact value, why couldn't we use it for other things? Why couldn't we use it for NFTs and digital artwork? Why couldn't we use it for portable identity? Why couldn't we use it for a Web3 social network where there's no central, intermediary party taking all your data? Why couldn't you use it for all this stuff? It's the same underlying stuff. You don't need to use it for just purely financial transactions. You can use it for regular web transactions. I say it's the most unclear because there's the most interesting experiments in here. And obviously people who are very strongly in taking it towards certain directions. A lot of this in the consumer side will eventually play out to, it'll have to be eventually consumer behavioral changes, which is one of the hardest things to kind of predict and replicate, if you will. But this is kind of where the fun part of this comes from, because again, all this is sort of intermixed in each other, because again, we're all using the same transaction layer system on the bottom.
Yeah, I like the way you described that. I feel almost more convinced that I sense a little bit of hesitation to make a commitment that it will move in the direction on the fun stuff category. But say I went to I was in Tahoe in the month of September, and I went to this art gallery, and they had a bunch of art in there and statues, and he was describing a rate sheet. So they price the paintings based on the rate sheet, and they get this rate sheet that's issued quarterly by like a central art gallery, and it has exactly like $16,429.50 for this piece of art. And it's just hard when I look at that book and he's flipping through, what's this worth, what's that worth? It's hard to not see how inefficient that pricing mechanism is. It's not determined by me, a potential buyer, although not of that piece, and it's determined by what all buyers are willing to pay. And pricing is this kind of beautiful abstraction if you think about the almost unlimited number of inputs that go into it, and what someone is willing to pay for a piece of value that's not directly consumable or usable. It's frivolous in a sense, and it just seems like art especially has to go this direction. I can't see how rate sheets or individually quoted pieces. Certainly there's going to be real world art, and I think there's an underemphasis in the NFT space on the value of, like, I have a painting on my wall or a statue in my room. Because you can't really, what are you going to do with that in a sense?
Yeah, I'm not sure if you're going to publish this recording in just audio and video, but if you do use video and anybody's watching, so this behind me, that's actually an NFT.
Awesome.
Displayed on an actual screen itself, almost like artwork itself. So even though from the fun side we're more cautious about this, from a personal side, I love
Yeah.
using and experimenting with all this stuff. Because, another viewpoint, I forgot who mentioned it specifically, is again, when you have this decentralized backbone of all this transaction processing available for anybody to use, the interesting byproduct of that is you turn everything into markets. Anything can be represented and put inside a token and traded immediately. And you can put on a decentralized market where like you don't really need the permission of doing anybody else. And so, yeah, if you want to take a bunch of generative art, break them all up into pieces, put it on a blockchain and have those things be tradable and have the individual participants set the price, buy side and sell side for both components, you can do it. And you can do all that without eBay needing to list you, without Sotheby's needing to list you, without the curators picking you for the art piece. Like you just made it because you like it and you can convince other people that they like it too. And so all this can be done on your own accord without the permission of anybody else. This is like the really cool and wild aspect where, again, it depends like how big these markets can be. Like if this is just constricted within just the fine art world, like, it's one aspect. But if this starts to touch, not just, fine art per se, but this starts to bleed over into gaming assets, well, like that's a pretty big market in and of itself. Well, if it starts to bleed into NFTs really can be represented as any financial assets, then you start to like really, expand the market size for a bunch of these things. So I guess to clarify, like when we say infrastructure, like we're purely not just looking at just the DeFi infrastructure stuff either. I think infrastructure powering all these other tools and stuff that we use, infrastructure for NFT things. Like I don't think from a fund side it ever makes sense to invest in an NFT project specifically, but the thing that goes into creating and powering and building all these things, these things can be really powerful developer horizontal slices that can cover and capture big pieces of the market itself. So these are the things like we tend to gravitate like the most towards.
I love it. I love that you also have an NFT art on the wall. So does it change? It's a screen. Does it remain static or does it change over time?
I feel you were telling me not to get too technical. Apparently before, so this is a Samsung frame TV. It's like specifically for turning digital artwork to almost make it look like traditional artwork. I probably should have paid attention more to the specs before I bought it. It only takes static images. I can't parse out like a .movie file or a GIF or anything. And so I'm trying to figure out some way if I can because this actually has like a live view generation attached to it. But like I can't display it because like the TV won't allow me to.
That's so funny. An analog digital conversion problem.
Exactly.
Yeah, well, we'll have Samsung work on that. That's funny. Yeah, we're almost there. This is the price you pay for being an alpha user. Things don't quite work out. I never download
Whoever made the TV was probably not imagining that somebody's going to use it.
I know. Even now, Apple asked me to download the most recent update, and I did that one time. We download the beta version, and I paid the price for weeks of not being able to close like a Chrome browser. So, I'm happily in the middle of the bell curve there. I want to ask you about DeFi since you're so knowledgeable about it and up on what's going on. Just throwing out a couple projects to you, and feel free to take this wherever you find is most interesting. But I like you have. I'm going to try to lightly paint this. So you have the sort of centralized Nexo and Celsius companies who are companies that have their own protocol, and they allow people to easily manage the moving between different assets and then managing the returns on borrowing or lending. And then there's decentralized completely with Aave, I never know how to pronounce it. Aave, and Compound, and I'm sure others. Are there other ways to kind of look at this, or how do you compare and contrast? Obviously, the centralization component of it is that these companies like Nexo and Celsius, they own your key. So if they lost it, your money would be gone. How else do you sort of think about this?
Let me, I guess, answer your question, in two parts. So one, I guess when you think of the DeFi applications and their contrast to the traditional finance space, the nice thing about these is that there are some like weird, unique things you can do with it, but a lot of the same market spaces and general thought processes apply. For example, in the traditional world, you have lending. In the crypto world, you have lending. Traditional world, options, asset management, prediction markets, DEXs, so decentralized exchanges, which can be like automated market makers, margin trading, sort of vaults and structured financial products. Probably the one unique one, which you don't really see in the normal space, is the whole staking concept. So you can like stake your assets to get a return. I guess you can think about this kind of like more like dividends or whatever. Please don't take that as financial advice. Like they shouldn't be equated, but you can abstractly think about them in the same bucket. I guess the biggest difference between centralized versions of these versus decentralized versions is, so yes, the centralized, to your point, they're the ones that hold and manage your funds. And they're the ones that are deciding and setting the rates, and they're the ones that are paying you. You're kind of trusting them to do this for you, and that they're going to take a fee out of this, and whatever they promise you. I don't know what Nexos or some of these other ones do, like 2%, 3%, whatever it is. Which again is still like a pretty good rate for a lot of these things, but they essentially abstract away all the complexity for you. They say you don't have to deal with any of this stuff. Just give us the money, and we'll give you your yield. In the DeFi component, you need to do all this stuff. So you need to do all the deposit, all the management, all the moving, all the collecting of the rewards, and then you take on the market risk of all this. So for a lot of these things, the lending and borrow rates are actually set by the markets themselves. So if there's more people who want to borrow and less supply, the rate will be higher. If there's more people supplying but less demand, the rate will be lower. And so if you do this yourself, you could get more, you could get less. You've subjected yourself to the market. And then I guess my nature is you're the one managing your own private keys. It's your own wallet. It's your own security. It's kind of on you. So if you screw up and mess up and send to the wrong wallet address or something, you could entirely lose your funds. So more sovereignty, more control, more potential economic upside, more downside, more security, OPSEC downside, more responsibility, more self-control. So the really, I guess the cool thing about the crypto space is it's not an either or answer. Like you can kind of choose your own adventure. If you want to be completely managed by somebody else and you want to do it, you can find that. Like you could even go more abstract than that. You could literally just buy like the Bitcoin ETF and like, I don't want to deal with anything. I just want to, buy on the New York Stock Exchange. I want some Bitcoin. I don't want to manage anything. Versus you can pick the fully opposite end of the extreme. You're like, I want to buy the Bitcoin myself. I want to hold it in my own wallet. I want to protect it in a safe. And you can go whatever variation you want in the middle of it. It kind of gives you all of the flexibility, again, to kind of choose your own adventure of like where you want to fall in that spectrum.
Yeah. Any idea what the distribution is of all, I know it's probably hard to, maybe it is, maybe it's not, what the distribution of say money in the ecosystem is? Is it, 80% with centralized or vice versa?
That's a good question. I have not looked at the current representation of it, but don't quote me on this. But I remember when I looked at it back in, I believe the 2017-18 era, it was like 80-90% were all on custodian-based exchanges, Binance, FTX, Coinbase of the world. Very little of it was off exchange. Post DeFi, post all this stuff, that has flipped. I don't know if it's flipped 1-to-1, but if I had to guess, it would probably, oh, bless you, by the way. If I had to guess, it would probably be about maybe 30 to 20% all off market, on your own, self-hosted, own controlled. A big portion of it being mediated through centralized exchanges, and a much smaller portion of it being mediated through traditional finance, which is new. Again, I could be wrong in the numbers on that. I probably have to go back and check, but if you were asking me, I guess the general overall sense, I think it would be somewhere around that kind of magnitude or framework. But again, I haven't looked into it specifically.
Do you look at DeFi from a fund perspective as just invest in the protocol? Does it make sense for you to invest in DeFi as getting
The yields
return?
itself.
Probably not, right? Or
Yeah,
is
so
it?
from We the Funds, I know.
Yeah.
We don't really do any of that stuff. It's more we're buying the projects that are building the protocols, where we own the tokens or company inside that, and that's kind of our long-term bet. We're not taking the funds of the fund and putting
Yeah.
it to like earn some return,
Yeah.
or whatever. Some crypto funds or crypto native funds do get to play around with that a little bit more. It is riskier because in that sense. You are trusting a lot of the, not trusting, but you're essentially depositing your funds into a smart contract that lives on a blockchain, and you're trusting that contract to basically do all the to kind of be safe and not be hacked and all that. And so the if you do want to do that, you just really have to worry about sort of smart contract and operational security and digital security, and you start just needing to have like a lot higher of a threshold. Again, if you're doing it from like an individual side, like you can take more risk on this. But like as soon as you start managing like
Yeah.
institutional capital, it's a much higher level of like responsibility, and that stuff gets harder.
So when Race Capital invests in a project, are you 100% of the time using traditional legal docs and lawyers? 0% of the time? Is there some where you've just done smart contract investing? Is that
I don't know.
happening?
I guess for us, 100% time, it's all governed by a legal contract.
Yeah.
We're not doing like
Yeah.
a pure,
I was gonna say
hey,
it
trust this
will,
like
right? I mean, someday, right?
just the smart contract. Yeah, most of these projects still today are usually have a company behind them, which the company is going to be located somewhere, which is going to have legal agreements on all the financing stuff or whatever. I guess if you're asking this is another interesting question. Is there's some crypto companies innovating on that front, where they're saying, well, if this is a decentralized network, that the network itself is doing all the activity. Why do we, the company, need to manage this thing? Why shouldn't the whole project just live on the blockchain itself? And this is where you come into like this whole concept of like a DAO. So it's like a decentralized autonomous organization. It's effectively like a community organized thing where the participants of that specific protocol own the protocol itself. And you kind of dissolve the central company and you allow the DAO to kind of take over and run with things. And it's the DAO that owns the thing, not like a particular individual company. If you're talking about like what's percentage and segments of people doing it, like this is still pretty like weird esoteric stuff.
Yeah, yeah. I mean, conceptually, I'm thinking, okay, if I'm running a company with 100 employees and we dissolve the hierarchy, there's no C-suite exec team, it's just, complete democracy. You vote based on what percentage of share you own in the company. I just can't see that going well for very long. I don't know. It seems like that would be the extreme end of, on kind of the centralization. I almost view this as you could see the parallel in governments too, where where is the control, where is the decision-making power? Say in China, it's very centralized at the top, and then in theory, the U.S. is more flat, and we vote our representatives in. But a company that is completely, I mean, do you see it? Where are we today on DAOs?
I guess let me give you two answers, like one in practice and one in theory. In practice, even if they try to be run by a DAO and a community, all that, there's usually a few participants, the founders, the main investors, that usually own a lot of the governance weight. So even if it is sort of super ethereal, like there really is a few participants kind of setting the vision or the stage for all that. And so in practice, it tends not to be like as super loose and utopian. Like it tends to be more representative, like just a centralized company, but just being more transparent about a lot of these things and kind of putting them more on chain, if you will. I guess the second part is like a lot of these projects are trying to run to this future where they're doing this like in the utopian version, where they're saying, we literally want all of the votes to be on chain by the actual people who own like the token itself. We actually want like the DAO to set salary ranges, and you get paid by the DAO. Like you don't get paid by a company anymore. So like the community decides what they want to pay you. Again, this is probably like if you're talking about all of the concepts that are easy to understand, like DeFi, not super, but like more, like there's a lot of analogies to like the normal world. NFTs are like a little bit weird, but like you can kind of understand some of the stuff. Gaming, like a little weird, but like, hey, gaming works. Like you're used to using virtual currencies. You can see the, some of the parallels. It's still pretty new, but it's still pretty out there. DAOs are kind of out there.
Yeah.
Even for people in the crypto ecosystem, like there's still questions, reservations. How do you build this stuff? Like, can you ever guarantee like these things work? Again, I think with like, I guess to go back to it is like, I think people like to group crypto up as like this one thing. And they're saying, oh, it's the frontier market is crypto. But again, when you dive into it, you notice that not all spaces are alike. There's spaces that are more sort of easier to understand, more legible. And there's things within the frontier, within crypto, that are still like harder for people to wrap their head around, still smaller, still weirder, still out there. Incredibly interesting, but still like very niche concepts.
Yeah.
And I put like DAO tooling and DAO infrastructure and DAO processes and governance and all that incredibly interesting topics, incredibly early from like a market perspective. But definitely like, again, if that suits your fancy or like that's what you're into or whatever, like it is definitely like super interesting areas to explore and think about.
Yeah. I wonder if this is how people felt when we created the idea of the corporation in the first place. Imagine trying to explain. So, somebody from, I don't know, 300 years ago asked you, so Chris, what exactly is a corporation? They're probably asking you in Latin. I understand what a body is and a corpus. And so we're getting a bunch of people together and we're creating a level of abstraction from what these people are doing and owning. But where's the thing? When people ask, what is Bitcoin backed by? Be like, what is this company? What is the corporation? What is it doing? Where is Microsoft? Show me Microsoft. Don't show me this building. Don't show me this person. Don't show me this screen. It's like it's just it's all in our imagination. So I think I think DAOs are definitely going to be a major thing in human civilization at some point. But you're right. It's on the fringe of what at least what I can conceptually imagine.
Yeah, and maybe one other observation that's kind of funny, because again, I guess I've been in this space for a long time, kind of first originally sort of owning some Bitcoin in 2013 and participating in a lot of the early Ethereum stuff and all that, is I think a lot of the early participants that treated crypto as an asset class and it's like digital gold and you just buy it and hold it, and that's all it is, that's all it's going to be for. It's not this general computation stuff. When these people saw DeFi, they're like, I don't understand. Like, this doesn't make any sense. Like, what? Like, no. Like, you just buy the asset and hold. Like, this doesn't make sense to me. And then you have this whole wave of like DeFi people that want to build financial applications and do all these things or whatever, which sometimes was a completely different subset than the first one. It was kind of a newer generation. When you told these people, hey, there's this new concept of like NFTs, they're non-fungible tokens, they're going to be represented as things, you're going to trade them around. A lot of the hardcore DeFi people were like, I don't understand. Like, why would people like, no, like DeFi, there's cash flows, you can see it. Like, we're hooking to general financial transactions. Like, why would you buy an NFT? Like, I don't get it. and then now, like when you talk to all the NFT people and you start explaining some of these newer concepts, DAOs, a lot of this other stuff, a lot of people are like, I don't understand that stuff. Doesn't make sense to me. So it's funny to see, again, people treat crypto as like the singular thing, but like there definitely is these different subsectors, different evolutions, different new frontiers, different variations, flavors of these things. Not saying all of these are going to work, not saying all of these are going to be the next biggest thing, but like there's a lot of different exploratory paths, all using the same thing, using a layer one underlying transaction system, aka the blockchain, but like all running at like very different market segments. And it'll be interesting to look back like a decade from now to see what are the ones that actually matter in the long term. At least to me, the financial one's the most clear. The other ones are all still TBD for a lot of other things.
Yeah. And the financial one is just so huge. not to downplay the effect that the others could have. Is certainly art and gaming are big categories, but like money movement is just, it's so fundamental to what human beings do. We create value in the world, and then we get paid for it in terms of energy and currency, and then we have that currency. So it's huge. God, it's just, every time I really try to wrap my mind around the global impact it is having and will continue to have, it's hard. It's hard to even conceptualize it, really.
Yeah, and yeah, from a venture investor perspective, I think one of the things most venture investors look for is like big markets. And yeah, with DeFi stuff, like you're talking about, again, TBD if it works for all this. It's working, but still on a relative global scale, it's still pretty small. But the markets you're tapping and touching into, global FX markets, global currency markets, global B2B payments, global remittances, like these are hundreds of trillions of dollars and collective value worldwide. I mean, these are some of the biggest things you could possibly get into. Again, the most fraught, the most difficult, the hardest to tap into. Like there's no easy path for any of this stuff, but if any one of these companies win it, and it looks like there's a few on this path, again, these can be monstrous companies if they can be successful.
So I take it on the spectrum of hey, we're in a bubble, to hey, on the other end of the spectrum, this is just going to be such an enormous market. Because as we're speaking now, October 25th, there's been a pretty big run up in cryptocurrency prices, generally speaking, across the board. This tends, looking back, it tends to have gone up and then come down and have gone up as people get more excited. Everything is a great investment when the price is going, when the chart looks like this. That's when most people say, oh, it's a good time to buy, and then it doesn't. Are you on that side? I mean, who knows, right? If things are overpriced or underpriced, we're in a bubble. But I generally view that as hard to impossible to say. But curious if you have any thought.
The really nice thing about being long-term venture holders or venture investors is like we don't need to think about this as much.
That's a good point.
It is true. Like in the crypto space, the cycles tend to be much rougher. I guess in the normal tech world, I think the cycles are also bigger. But again, because there's no public pricing to it, it's you don't feel it as strongly. Yeah. And like the whole entire macro is a little bit more stable. In the crypto space, volatility is ridiculous. And so, right now you can feel like on top of the world, and in 6 months you can, there's a joke within the crypto community that like whenever the price falls, everybody needs to go back and get like a job at McDonald's or something. That's funny. It's like there's extreme volatility in here, and honestly, like on a personal basis, it's hard to stomach that sometimes. Like as human beings, I don't think we're very well equipped to handle 80-90% drawdowns. Most people start doubting themselves and their self-worth and all this sort of stuff. But the crypto space is weird is that this is not normal, but like this regularly happens. And so like, we've been in periods of -70, -80, -90. We've been in periods of plus all this sort of stuff, then back down and back up. And like, again, to some extent, like, I guess this is the approach we take of like, we're long-term venture investors. We buy these things, we hold in it. We're looking for the fundamental companies. We don't really care so much like where the price is going to be in the next week, year, even 3 years or whatever. But like, we really care where it's going to be in a decade. And the things that are going to outperform, they're going to outperform significantly. And there's going to be huge benefits towards holding these things in the long term. And the things that won't work. Mm-hmm. Venture investing, not every single investment you make works, and same thing applies here. Not every single one of these concepts is going to be a complete home run. But our hope is to catch a couple of these things, to own enough and to have enough skin in the game where it makes a material difference.
Yeah, and also contribute to they take your money because they want the name recognition, the brand recognition, the validation, the capital to run and grow. So I sometimes feel like investors don't appreciate the value that you're providing to the market, to people. You're allowing people to not have to work at McDonald's and to work on the thing that then turns out to be the next, I don't want to say McDonald's, but the next Apple, the next large company. So
I remember, I guess like you're asking for stories, like one good story here, like when Me and my partner Edith, we're one of the first and second seed investors for Solana, which is really big now. It's a layer one protocol. They get all the recognition or whatever. But when they were first starting the project in 2018, this is when one of the crashes happened. And I think they had all their seed round. They were super oversubscribed and everything. And then when the crash happened, basically a bunch of people disappeared and like didn't return their calls or anything. And I remember Anatoly and Ross like called us and said like, "Hey, are you guys still good?" And he was like, "Yeah, we're still good." and a lot of people pulled out and they didn't end up raising, I don't think, as much as they really wanted to. But yeah, like for sticking again, a lot of this it's fundamentally the same thing as like when we back founders, we make a promise, and when we stick by our words, like we do what we're going to say. And we're there when times are tough, and we're there when times are good. And in the crypto space, the times are really good and really tough.
In the same month.
Like in the same month. And we try to be as consistent as possible and help out where we can and be value add and, do all the other stuff. But a lot of it is just trying to stay like as balanced as we can, especially during all these times. Like, we try to be a little bit more of an anchor point to that regard.
Awesome. Well, kudos to you, man. Congrats on all the progress. I wish you, nothing but the best, and hope you get that EFT digital art painting figured out for all your video guests. But yeah, anywhere, I guess you're pretty active on Twitter. It's probably the best place for people to engage with you. McCantron, great username.
Yeah, I'm super easy to find online. Just Chris McCann, You can search me. And yeah, my Twitter handle is McCannatron. Long story where that came from.
That's awesome. All right, buddy. Well, I really enjoyed the chat today. Thanks so much for hopping on.
Yeah, thanks, Mike. Thanks for having me.